Okay. Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I'm here with you for AFB. And let's move forward and do a few questions in the series of AFB that we were practicing. Okay. Before I move forward, kindly confirm if I'm audible as well as visible. Okay. So let's move forward and start with the class today. And before that our JAIIB batches for the November-December examination has already been launched. Multiple batches have already been going on, and currently we are coming up with new batch on 16th of August. So if you're looking forward towards live classes, you would like to practice through ebooks, you would like to study the classes through the recorded lectures, you would like to have test series, all these things you will be getting under one roof, and all you can do is you can look forward to our website or our app for further details regarding the same. And at the same time, if you're preparing for JIIB examination and you would like to avail some discounts, so all you need to do is use the code 541 for to avail a discount of up to 78%. This amount of discount is available only on app. If you're using our website, you'll get a discount of 77% if you use the code Y541. And an update, we have started with our mega sale and special offer for the upcoming examination for JIIB as well as the CAIIB examination. So at present, flat 75% off is there. At the same time, there's a double validity which is available for you. So if you're looking forward to it, then kindly do not delay it. So this is the limited period offer. I'll show you this particular offer by the end of the class, how to avail these offers on our website. So let's quickly move on and start with the class. Okay, so let's begin, everyone. This is the first question. Which of the following expenses should not be treated as a capital expenditure? Among the following, which should not be treated as the capital expenditure? Is it expenses paid on installation of a plant, or the cost of dismantling a building in case of a new building is to be constructed on the land, or is it the land and building in no, the legal expenses incurred to defend a suit related to the title of the patent? The suit has been lost, and the last is fees paid to engineer who constructed the plant. Go ahead and have a look at the question. Okay, so the correct answer here is C. The legal expenses which have been incurred to defend a suit. Basically, you were trying to defend a suit in terms of your patent, that the suit has been lost. It cannot be treated as an expenditure in terms of the capital expenditure, as the capital expenditures ideally provide us an asset, or basically a repayment of a liability. So both of these things can be done here. In this case, none of these is happening. In this case, what is happening is you've lost a suit that was related to the patents. So currently, this particular situation clearly says that this is not where we can talk about a capital expenditure at all. Now, this is the next point. Technical liquidity is normally evaluated on the basis of following ratios in the human enterprise. Is it because of the current ratio, quick or acid test ratio, or absolute liquidity ratio, or all of the above? When we talk about the liquidity, liquidity means in how much time we repay our repay the amount that we would need if anybody asks us to repay within a limited period of time. If I have to repay someone within a period of 3 months, 2 months, 1 month, or less than 1 year altogether. So this is where we can use the liquidity ratios. Among the liquidity ratios, the top ratio or the most popular ratio is the current ratio. Then we have the quick acid test ratio, and along with that, we have the absolute liquid ratio as well. So all of these are basically a part of the technical liquidity. Now, the next question, it says the trade receivables is of 40,000, trade payables is 60,000, the prepaid expenses are 10,000, inventory is 1 lakh, and goodwill is 15,000. How do we calculate the current ratio? The current ratio can be defined as current assets upon current liabilities. When we talk about this particular ratio, it goes like all the assets should be taken on the debit side. How many of these are current assets? The trade receivables, that is the money that we'll have to receive from someone within a period of 1 year. It would be added in the current asset side. Then we have the prepaid expenses, it would be added as 10,000 there. And then we have inventory of rupees 1 lakh. This would also form a part of this. And what goes on the denominator side, that would include 60,000 of the trade payables, and that's it. Because goodwill is not a current asset nor a current liability. It's basically a long term asset, and that too an intangible one. So if it's an intangible asset, what would be the answer there? So in this case, what would be the answer? Go ahead. This would be 1,50,000 divided by 60,000. The answer comes out to be 2.5 is to 1. That means the answer is D. The correct answer is equal to 2.5 is to 1. Okay. For a better clarity, I hope you can see this. Now, let's move on. A company's current ratio is 3 is to 1 and the liquid ratio is 1.2 is to 1. Okay, now this is a tricky question because they have given the current liabilities of 2 lakh. In this case, we know that the current assets upon current liabilities is equal to current is equal to 3 is to 1. This means 3 upon 1. If the current assets are still unknown to us, but we know the value of current liabilities, which is 2 lakhs, is equal to, that is 3 upon 1. So now you know the current assets upon current liabilities. So now let's just cross multiply and find out the current assets. The current assets would come out to be 6 lakh rupees. The total amount of assets that this organization is having is 6 lakh rupees. Now let's find out using the liquid ratio. Liquid ratio means all the current assets are included except inventory as well as the prepaid expenses. So it's time that we remove all these and take out 1.2 is to 1. The quick assets are still unknown while we still have the current liabilities. Now what is equal to 1.2 upon 1. So the quick assets would come out to be 2,40,000. So what's the difference between current assets and quick assets? Basically, I'm just writing the formula at the top. Quick assets is equal to current assets minus inventory minus prepaid expenses. So in this case, the correct answer will come out to be 3,60,000. This is the answer for the question. So the entire answer is written here. So I hope it helps you. Okay. Now comes the next question. The concept that an accountant should not anticipate profits but must provide for all the losses is known as. Okay, in this question, what happens is in this question, we find that the concept that every accountant looks forward to noting down of all the losses, but they're never ready to anticipate the profits, because if we anticipate the profits and we do not get it, we'll still have to pay taxes on that. So it's always better that you just look forward to the losses and you keep a specific amount. Let's talk about it in a detailed manner. If anybody is having any kind of loss, they should always keep a specific amount aside for that. If you do not keep an amount aside, it's too risky, because if the company falls, they will not have enough money in their pockets to recover from it. While if the profit comes, they'll be more than happy. So basically, what is happening is an accountant should always be ready to anticipate the profits, ready to anticipate the losses, but not profits. That's the particular concept. The concept is based upon materiality, prudence, consistency, or the reduction concept. The other name of this concept is conservatism. So if it's conservatism, how do we look forward to it? It's going to be the concept of prudence. The prudence or the conservatism concept says that anticipate the losses but not profits. You keep a money aside for all the losses, but don't try to keep any specific money for the profits. Because when you'll earn the profit, you'll know it, but in terms of losses, you will not have enough time to record it. So it's always better you keep that money aside ASAP. That is as early as possible. Now, which transaction cycle includes interactions between an organization and its suppliers? This particular organization and its suppliers. Is it the revenue cycle, expenditure cycle, human resource or payroll cycle, or general ledger and reporting system? When we talk about the transaction cycle, the transaction between the supplier and the organization is linked with the supplier and the organization is linked with expenditure, because we purchase goods from them and then we make the payment for the same, and that's how we receive this particular amount of money. So technically it would be expenditure cycle. Okay. This is basically related to the cost. I think we will skip this question. Let's move on to the next one. Which of the following account with normal balance is shown at the debit side of the trial balance? As per the various accounts of the trial balance, in which area it would be shown? Is it the creditors account or the unearned income account, rent income account, or cash account? Which of the following account with normal balance is shown on the debit side? Remember, on the debit side of the trial balance, we have all the assets, we have all the expenses, as well as the drawings. So these three topics are coming on the debit side, while the remaining items, that is liabilities, incomes, and capital, these three goes towards the credit side. Credit side, that means creditor, this will not be a part of the debit income. Unearned income account, this some income is not earned yet, this is more or less right now a liability, we don't have to note it. On the rent income account, this is again an income is shown on the credit side, so this is also cancelled out. Then we have the cash, this is an asset. So basically this would go and fulfill the particular amount of debit side. So that means the point is D, cash account. The words to balance brought forward or by balance brought forward are recorded in the particular column at the time of posting of. This question is from ledger. Is it the closing entry, transfer entry, opening entry, or adjusting entry? When we talk about to balance brought forward or by balance brought forward, so there this is basically we are bringing it forward. That means this was the closing value which was taken to the next accounting cycle, or maybe the next month, whatever the scenario would be. So since it's taken to the next level, it would be basically a closing entry. Okay, this one is for the brought forward. Now this is for brought down, right? There are two things, one is brought down and one is carried down. Let me show it using the ledger. Okay, now let's look forward to this. This is your ledger account. Whenever an asset has a ledger account, it would start from here to balance brought down. So this is basically the brought forward amount. This is for the brought downs. And then we have the amount for the carried downs. That is by balance carried down. Now this particular amount is again taken to the next year. This becomes brought down. This is the balance at the beginning of the year. For example, I said that I have a furniture worth rupees 1 lakh. Then by the end of the year, nothing was sold, and I'm just ignoring the portion of depreciation as well today. So then it, by the end of the year, it would still remain as 1 lakh, and then when we are bringing it forward, it would turn out to be 1 lakh again. So here when we talk about the brought forward, or the balance brought forward, I was just thinking about this one. So personally, it's still the opening balance, which is the closing balance of the previous year. So when you see CD, this is the closing balance. And when you see BD or BF, this is the opening. Right? So this is how we note this down. Let's finish the next question. That is called the accommodation bill is drawn. This is from the bills of exchange. To finance the actual purchase or sale. Is it basically drawn to finance the actual sale or purchase, or is it drawn to facilitate the trade transmission, or to cater the fund requirements of both the parties, or none of the above? When we call it an accommodation bill, it accommodates, or it helps the other person. How does it help the other person? It helps to finance them at the time of dire need. So basically it is to cater the funds for both the parties. A bill or draft or notice which is basically accepted or endorsed by one person for another without consideration, to enable that other to raise money or to obtain the credit thereby. This is just to help the other person, to finance the other person in terms of dire needs. Okay, if we still had one particular question, let's finish this off as well. If any material is lost in stores due to fire, what will you do about that? Is it a part of normal loss? Is it a part of capitalization? Is it a part of abnormal loss and it should not be included in the cost or transferred to the next period? Now, this point is something, let's make it clear to you. Let's talk about this. When we talk about this scenario, what happens here is, when we lose any material because of a fire, that means that fire is an abnormal event. It doesn't happen every year. So basically it's an abnormal event, and such an abnormal event will cause an abnormal loss. So basically it would be excluded from the cost. So in this case, the correct answer is C. Right? So if you're looking forward to Adda 24/7 for your JAIIB classes, let me show you how you can look forward to this area. And so there it is. What you need to do is you need to go to our website, and this is where you can find it. It's better you go through the app first, because app will give you more discounts than the website. So what I'm doing is I'm just opening up the website, and for here I am clicking on the area of JAIIB and CAIIB. So we are just starting with the November December English batch. So I'm just opening it up for you. The batch is about to start from 16th of August. So this is the entire batch for 16th of August, where you get more than 60 ebooks. We have got more than 80 topic wise tests, and then we have the recordings as well as the live classes going on. These are the study plans which are available for you. You can review it, you can look at the faculty who will be taking up your classes. So these are all the things which are available for you for further reference. So you can check it out on our website or in the app. So what you can do here is, let's just click on the term buy now. You can use the code Y541. So when you will apply it, you will get a discount of 77%. If you're opening up in the app, you will be getting an additional discount of 1%. So the total will come out to be 3679.77. If you're using the app, then this particular amount will decrease further. Okay, let me just show you. After applying the discount, it looks like this. So if you haven't reviewed a JAIIB batch yet, then kindly review the batch. And to avail the discount, you can use the code Y541. So thank you everyone for being there. I'll be meeting you in the next class. My classes are on a regular basis on Tuesdays, Wednesdays and Thursdays. That is thrice a week. So you can check out our website or the app for further details regarding this examination. Right? Thank you. And don't forget to use the code Y541.